Good afternoon, ladies and gentlemen. A very warm welcome once again. The man on the floor is a very well-known individual in his own right, handling one of India's largest, most necessary corporations, the National Stock Exchange of India. Ladies and gentlemen, a warm round of applause for Mr. Ashish Chauhan. Mr. Chauhan, over the last 20 odd years, has created a fabulous infrastructure where amongst the fastest exchanges in the world, if not the fastest, the National Stock Exchange is indeed a great achievement as far as India is concerned, not only on the digital space but also on the financial firmament. Mr. Chauhan, let's begin the conversation given the kind of pain that we are feeling in the markets at this point of time. What do you think are the two or three trends that will help retail investors navigate this difficult time?
Now, broadly, just to correct you, the NSE was created in 1992. So 34 years I've been working on this, not 20. It's just that you looked at me 20 years back, so you thought that's how it works.
I added the BSc experience as well.
That's why I'm saying. So, but life goes on. And India broadly you have seen the Indian ships being allowed, which tells you how far we have come from before. But overall, today, India is the fastest growing economy. We are also one of the largest savers in the world. So at $4.2 trillion economy, at 30%, we are like almost $1.2 trillion of savings. And large part of that savings are now coming into the financial economy. Earlier, they used to be in gold and silver and real estate, now banks and stock markets. And also broadly, what was not a productive investment earlier is coming into productive investment. So that's the basically the framework where India does not have a capital account convertibility. And so if you go to, say, Korea or Japan, they end up investing all their savings into American companies. Indians save their savings into Indian companies on Indian markets, right? So it's a stark difference compared to the countries with capital account convertibility vis-a-vis not having that. And so India is in a unique position. We have now 12.7 crore investors being serviced through NSE, which is literally more than 30% of all households in India. And 99.85% of all PIN codes, almost, I think 28 PIN codes don't have NSE investor today. If you go to Ladakh, we have investors. If you go to Andaman, Nicobar, I think the guys moving with the spears also have a demat account and are having mobile app of our brokers. And similarly from Dwarka to Arunachal Pradesh, we have investors who are investing into India's future, right, in the productive capital. Also the technology. India is also the youngest nation. It's the demographics which makes a lot of difference. The China grew from 1982 to almost 2015 on the back of a population which was building up. Today, they are suddenly going down. And in 2024, they had less number of people than 23. In next 70 years, they will become half the size today. That is true with Korea. In next 40 years, they will become half the size of the population today. India is going to grow even further. And that's where I'm going to remain young for very long. And so demographics gives you a great advantage. Demographics with the technology adoption over last 35 years of liberalization. Also kind of together with the technology, which is information technology that came about, India adapted very well compared to rest of the world. Today, UPI or stock trading through mobile or many other things which we do with CoWIN and GST, everything which we do is basically automated. US doesn't have it. I call US sort of a 20th century technology in 21st century. And even China doesn't have what we have. And so for me, the technology adoption of our population also going to help us because technology is the only wealth creator in the long run. The societies which adapt to new technologies are going to create more wealth vis-a-vis other societies. And those societies which adapt to technology doesn't have to invent them. Sometimes you have been made to believe that you have missed the AI bus, and so you will remain behind. No, if you adapt to this new framework, like what you did with the, the information technology, you did not invent computer chips. India did not invent Unix nor relational databases, but we became the best users. And that is going to be true now. Almost 3,000 GCCs have come up in India. Many more are coming up every year. Why? It's because this population is young, 24 by 7 by 365 days. I mean, literally 366 days sometimes a year. There is no other population which is willing to work so hard, which is so honest, so diligent. And we have proved during COVID that we not only ran India well, but we ran the world well, because we are running the world's back office, and world continued as is even during their lockdowns, because we were working from homes. And that is where I think people are underestimating India's strength on many of these things. Our inflation remains low, our fiscal deficit is low. So overall, this is the right place, right time. The last part is the least leveraged economy in the world. We have banking system which is half the size of the economy. Nowhere in the world you have this kind of framework where the banking system literally is like 3:1, 4:1 numbers. You are running at half the size or 60% of the economy size. You have a long way to actually give leverage in difficult times.
Mr. Chauhan, last time we spoke, it was on the eve of the war breaking out in West Asia. Today, when we're talking about a lot of those advantages, they are looking like they're going to be at risk, whether it's the fiscal deficit, whether it's inflationary concerns, the whole situation around the crude basket, and of course, in line with that also retail investors, SIPs, and overall sentiment impact. So, how are you viewing the situation 1 month in? I know you've seen several cycles in the market, but this time, is it looking different? Are you concerned, given that we've had the benefit of lower crude oil prices now for a few years? Are the markets ready for this kind of shock?
Broadly, on a crude situation, we currently, before the war broke out, we were importing almost $120 billion worth crude. Now, the new prices is probably $160, $170 billion. It's a $50 billion extra. Today, with almost $700 billion of reserves currently available with us, we are pretty much in a good shape. And of course, we have other alternative ways of generating a fuel, which was discussed one session before. And so for me, the competitive advantages vis-a-vis rest of the world still remains. We remain the largest and the fastest growing economy. We remain the youngest economy. We remain the most saving economy. On $1 trillion a year, $1.2 trillion a year is very large. And so least leveraged banking system, least leveraged government, the fiscal. And so you have a room to grow in all of them. Suppose like what happened in COVID. This is not a COVID period. But COVID, there was a slippage on the fiscal deficit, right? But we had that room to do that. America today, when they went into COVID, they were less than, the debt to GDP ratio was less than India's. Today, it is like 1.5 times India's. And those kind of things. So we remain actually the most stable economy in the world in terms, and also ready to grow faster. So in a comparative basis, because ultimately it's not, you are not living in isolation. You will also go through some issues, some trouble, because the world is going through trouble, but comparatively you will have lesser troubles.
Well, it's been the immediate impact though, and I understand how you've painted the broader picture and how things are looking intact and we have several advantages. In the immediate term though, are you seeing SIPs looking shaky? Are you seeing FPIs? Of course, they've clearly been sitting out, but are they nervous? Is that making the markets jittery? What is the more immediate impact that you've seen?
Broadly, since the war broke out, the FPIs have taken out almost $54 billion from the Asian markets, ex-China. So that's largely South Korea and Taiwan. They've taken out around 6 billion from India, which is not that large compared to South Korea and Taiwan, because they also performed very well before because of the need for the chips, memories, electronic memory chips, and TSMC and other things. So that's where they had gone up substantially. Now the AI hype is also coming down to some extent, but also due to the sort of the world market going down. Why? Now you have to understand why the world markets are going down. Is because once the oil starts having a higher price, it's a horizontal thing. So it goes into every little commodity, every little things you consume will have a slightly higher price later on because the transport, manufacturing, everything requires energy. And that increases the inflation. Once inflation increases, the central banks, which were trying to reduce, especially in US, trying to reduce the interest rates, have no longer the room to bring it down. So their 10-year bonds came up from 3.9% yield to now 4.4, 4.6%, which is a very large jump. And that has ensured that the gold rally, which was like $5,400 an ounce, has now become 4,000 or in that range. All the cryptos have come down. Why? Is because when the dollar strengthens, people who borrow the money in dollars and start putting in these assets, they start actually taking it back, which is called carry trade. And so they start taking it back. All the assets in the world goes down, and the ones which had gone higher ups because they had given larger returns, people try to average by selling them more, and that's how you see Korea going down more or Taiwan going down more. And those kind of stuff is why the inflation is going to go up. Already US inflation print last week was very bad. That's why their market has tanked over last few days. But India has not seen that inflation orientation yet. Why? Is because, again, India produces most of the sort of food stuff it wants, which is where the inflation affects maximum number of people. In fact, last week, one of the foreign economists who had come to visit me was asking me that, will this increase your food prices, which will impact other things? And I said, no, because what happens is we also subsidize a lot of food ration, 80 crore people getting minimum ration. And so effectively the impact of inflation which comes into US or other countries which are what we call laissez-faire markets, ours is not, on especially food stuff. And that is the basic of inflation, core inflation we call it. There we don't see too much of an issue, even if it prints higher, because most people are not going to get affected. And so that's where India is sort of the nuances of India count quite a lot when they don't come into the picture, because all economists tend to think all economies work the same way. They don't, right? The small little sort of nooks and corners make a lot of difference.
Mr. Chauhan, you have often talked about the youthfulness of India being one of the best strengths that the country has to offer to foreign investors. Even your own NSE has this data on the Gen Z being the biggest drivers of growth, not only for the exchange, but for the mutual fund market. They are undergoing a tremendous strain given the correction in the markets. What would your advice be to them, given that they are experiencing this for the first time, the downturn?
Some people see what happened is around when Mr. Modi took over in 2014, India had 1.67 crore investors. Today they're 12.7, so almost 7.5, 8 times. But when we went into the COVID, we had like 2.5 crore investors. And so from 1.67 to 2.5, almost 1 crore investors, which were young, who had come into the market due to the mobile phones, 4G, 3G giving sort of easy access to the stock markets. They had come, they saw the COVID sort of dip almost 40% of the market. And so they've gone through that. Some people who have come later on have not gone through that kind of numbers. But broadly, my understanding is that most people invest for long term. And they have not invested 100% of their assets into this. Broadly, 5, 10%, 2% is what overall sort of their assets are into stock market. So they don't panic. Again, if you look at it the other way around, when Mr. Modi took over, the total market cap of India was like 67 lakh crore. Today, it is 450 lakh crore or thereabout, probably 430 now. So again, 6-7 times, right? So the wealth through the stock market has increased manifold. And we have seen the SIP average now is around 29,500 crore for the fiscal as a whole, right? And which is like very, very large. And overall, the retail investor holding, along with the mutual fund holding, which is retail investors holding, is around 18.5%. The foreigners have come down to now 15-16%, right? So overall, Indian retail is owning more of the Indian corporates than the
इन्होंने ही बचा रखा है निफ्टी को.
See, again, when it goes up, they will be benefiting, and that's how I see, right? So, again, it's not that we versus them. Those people have more choices to explore, and none of them come here for charity, right? So they would want to take their money away. But why they didn't take out money this time too much is because we were not performing highly over last 1 or 2 years. So they had to go to Taiwan and Korea to take out money and things like that. So it's not that once they see that our price earnings have become, now today we are in the 20s price earnings on Nifty and all. We were on 24 in that range, right? So we have already come down substantially. For me, price earnings, when they go very high, either the earnings have to reach the prices or prices have to reach the earnings, right? So now we are coming into a reasonable zone. Once things clarify, sort of even in February, they were positive. FPAs were positive in February. Only in March they become negative because of the new situation, right?
Just a moment. Let me just take this conversation forward on the youth part. Mr. Chauhan, NSE changed the landscape of investing somewhere in the mid 1990s when, you know, online screens came in and faceless transactions happened. Something similar is also happening via the NSE in Gift City. You are now providing opportunities via NSE IX to let Indian retailer investors buy overseas money under the RBI threshold. How has that experience been? What is the kind of growth that you are seeing there?
It's early days. We have just started actually registering the investors. So it's early days. Around 9,000 investors have joined the platform. So I don't think it's going to be that big going forward. But more importantly, one Cyprus company has got listed 2 weeks back on the Gift City in India, NSE International Exchange. One Indian company is getting listed, Indian origin company from abroad is getting listed. A Sri Lankan bank has raised bonds from Gift City. Overall, Indian companies have raised almost $70 billion of bonds on using our platform, NSE International Exchange. And so, for me, when Gift City was started, my hope was that in 10 years' time, if it raises $1 trillion for India's sort of growth, it will be a good achievement. We have reached $70 billion. We have a long way to go. And the Singapore exchange, which used to trade Nifty, all their orders now, last 2.5, 3 years, they come in. And we are now trading almost $5-6 billion a day. It's one of the largest derivatives exchanges in the world, although NSE is very, very large. But even NSE International Exchange also has become very, very large compared to the world markets. Like you don't have a similar size exchange in Dubai or other places, right? So for me, it's again very early days for the overall ecosystem there. But the omens are good that people are now taking it as a serious sort of a jurisdiction. And now with what is happening in the Gulf, people want to come to Gift City to set up those shops and invest out of Gift City into the rest of the world. So the third-party countries will come through Gift City to invest in fourth-party countries. You are just servicing them like what Singapore does and make some income out of that, right?
Mr. Chauhan, I know that work is on for the IPO, but we have to always ask you any further details you can share at this point because everyone's keen to know what's in store. And with market conditions right now, is it being delayed? Is it on track? Anything you can share with us?
It's on track. We have appointed 20 bankers and 7 lawyers. And you can imagine with all of them put together, most of my time goes there, but it's on.
All right. Look.
So I have this very interesting incident to relate. We were just sitting in the coffee shop some time ago. One gentleman approached me from the audience saying कि एक सवाल तो आपको पता ही है कौन सा पूछना है. So there are many shareholders of the National Stock Exchange in the audience. 2026 calendar, should we see a listing on the BSE?
Last time you said 4-5 months.
Yeah. So both of you have answered each other.
People want to hear from your mouth.
Broadly, we are on track. So whatever time it takes. See, I have for me, I have to be directionally correct, right? So I can't be giving deadlines for things which are not in my control, right? That's why, but it's looking feasible today. Whatever sort of you want to say, the 26, it's feasible.
Okay, that's one piece of good news that is coming in the markets, much needed. Thank you, Mr. Chauhan.
Thank you.
Ladies and gentlemen, a big round of applause there. May I please welcome on stage Shri Alok Nair, CEO of Business Today, to please come up on stage and felicitate Mr. Ashish Kumar Chauhan.